If you were born before 1963, Social Security has already made several decisions about your money, and at least one of them may be wrong. Not because of fraud, not because of a glitch, because there are rules buried inside the Social Security system that reduce or eliminate benefits for people in your exact group. And SSA applies them automatically without explanation, without a phone call, and without a single letter telling you it happened. Right now in 2026, there are people born in 1955, in 1948, in 1961, people who have been collecting Social Security for years, who are receiving hundreds of dollars less every single month than what they are legally entitled to. And there are widows and widowers in this group whose entire survivor benefit was either reduced or wiped out completely, not by an accident, but by a rule that was just permanently eliminated in January 2025. The back payments from that eliminated rule are sitting in the SSA system right now. The average check is $6,710. Some people in this group are owed over $22,000. SSA is not calling. SSA is not sending letters, and the money does not move until you take one specific step. Stay until the end. I am going to tell you exactly who is owed money, how much, and the 3 steps that determine whether that payment lands in your account or expires in a federal processing queue. Before we get into the numbers, if you are not subscribed to this channel, do that right now and turn on the bell. Here is why this genuinely matters for people in your group. The rules around Social Security change every single year. Benefit calculations, earnings limits, survivor benefit rules, Medicare premiums. When they change, SSA does not send you a personal explanation. They change the policy and expect you to already know. What this channel does is take those changes, break them down by what they actually mean for your specific birth year and your specific situation, and get that information to you before the deadlines pass. The people who are subscribed here find out in time. The ones who are not tend to find out after the wrong decision, after the reduced amount is already locked in, after the back payment window is closed. Subscribe, turn on the bell, and let's get into it. People born before 1963 do not all share the same full retirement age. And that specific number, down to the exact month, determines everything about whether you are collecting the right amount right now. Here is the complete breakdown. If you were born in 1954 or earlier, your full retirement age is 66. You are between 72 and 83 years old. Most people in this range have been collecting for years and assume there is nothing left to check. That assumption is costing some of you real money every single month. If you were born in 1955, your full retirement age is 66 years and 2 months. Born in 1956, 66 years and 4 months. Born in 1957, 66 years and 6 months. Born in 1958, 66 years and 8 months. Born in 1959, 66 years and 10 months. Born in 1960, 1961, or 1962, your full retirement age is 67. That is your number, not a round number, not what your neighbor told you. Your specific month and year, and if you claimed without knowing it exactly, there is a real chance your monthly benefit was reduced in a way you never fully understood. Here is what that reduction looks like in real dollars. If your full retirement age was 66 and 6 months, meaning you were born in 1957, and you claimed at 62, your benefit was reduced by approximately 25.8%, permanently. On a $2,000 monthly benefit, that is $516 less every single month for the rest of your life. Over 20 years, that is $123,000. SSA did not remind you of this before you claimed. They processed the application. That is all they are required to do. Now here is the part that affects the largest number of people born before 1963, and where the $22,080 figure actually comes from. For 43 years, the Social Security Administration used 2 separate rules to reduce or eliminate benefits for millions of Americans. Most people affected had no idea either rule existed until they went to claim and got a number far smaller than what they expected. Some got 0. Rule 1 was called the Windfall Elimination Provision, WEP. Here is who it targeted. If you worked in a public sector job, a government job, a school district, a state agency that had its own pension system and did not withhold Social Security taxes from your paycheck, and you also worked other jobs in your lifetime that did pay into Social Security, the WEP formula slashed your Social Security check. It did not eliminate it. It reduced it using a modified calculation that treated your Social Security earnings as worth less than they actually were. The average monthly reduction under WEP was $480. Some people lost as much as $587 a month, every single month, for the rest of their retirement. Over 3.2 million people were affected by this rule alone. Rule 2 was called the Government Pension Offset, GPO. This one went after spouses and widows specifically. If you were entitled to a spousal benefit or a survivor benefit based on your husband or wife's Social Security record, and you also received a government pension from a job that did not pay into Social Security, GPO reduced that benefit by 2/3 of your pension amount. Here's what that looked like in real numbers. Say your government pension was $1,500 a month. 2/3 of that is $1,000. GPO subtracted $1,000 from your spousal or survivor benefit. If that benefit was $900, the subtraction wiped it out entirely. You received zero. Nothing from your spouse's record. Nothing from decades of your husband or wife paying into a system that was supposed to protect you. 800,000 widows and widowers lost their entire survivor benefit this way. Not a reduction, a complete elimination. Both of these rules are now gone. The Social Security Fairness Act was signed into law on January 5th, 2025. WEP and GPO were eliminated completely, not reduced, not phased out, gone. And the law was made retroactive to January 2024. That means SSA owes every single affected person the difference between what they received and what they should have received, going all the way back to January 2024. A minimum of 12 months of back payments paid as a lump sum. The average retroactive lump sum payment issued so far is $6,710. For people whose entire survivor benefit was eliminated by GPO, a survivor benefit of $1,840 a month that was fully erased, the back payment is over $22,000. Plus, that full benefit reinstated every single month going forward. SSA began processing corrections throughout 2025, but not everyone has received their payment. SSA has over 4 million individual account adjustments to process. They are working through them in batches. While your case sits in the queue, you keep collecting the old reduced amount, with no letter from SSA and no explanation. The money is in the system. It is not moving until you check. 4 groups are affected. Listen for yours. Group 1. You worked as a public school teacher, especially in Alaska, California, Colorado, Connecticut, Georgia, Illinois, Kentucky, Louisiana, Maine, Massachusetts, Missouri, Nevada, Ohio, Rhode Island, or Texas. And at some point in your working life, you also worked other jobs where you paid into Social Security. Group 2, you worked as a firefighter, police officer, or any state or local government employee in those same states. And you also paid into Social Security through other employment at any point in your career. Group 3, you are a federal employee who was hired before January 1st, 1984, and you were enrolled in the Civil Service Retirement System, CSRS, not FERS. If you do not know which system you were under, check your old federal benefits paperwork or call your former agency's HR office directly. Group 4, you are a widow or widower whose spousal or survivor benefit was either reduced or eliminated entirely because you receive a government pension. If you fall into any one of those 4 groups, a back payment may be sitting in your account right now, uncollected, and SSA has no plan to contact you about it. 3 steps. This is exactly what everyone born before 1963 needs to do. Step 1. Go to ssa.gov and log into your My Social Security account. If you do not have one, create it. You will need your Social Security number and a valid email address. It takes about 10 minutes. Once you are logged in, open your benefit statement. Look at your current monthly benefit amount. Then look specifically for any line that says WEP or GPO. If you see a reduction listed there and your monthly benefit has not gone up since January 2025, your correction is not complete. Your case is still sitting in the processing queue. Step 2, call the Social Security Administration directly. The number is 1-800-772-1213. When an agent answers, use these exact words. I want to verify whether my account has been fully corrected under the Social Security Fairness Act for WEP or GPO. Write that sentence down before you dial. That specific language tells the agent exactly which system to open and which correction history to pull. They will tell you immediately whether your case is closed, pending, or has not yet been assigned. If it is pending, ask for the expected processing date and ask them to note that you called to follow up. If they say it is closed and you believe the monthly amount is still wrong, say these exact words. I would like to file a formal request for reconsideration. That phrase triggers a supervisor-level review, not just a standard callback, a separate review of your entire correction record. Step 3. This step is specifically for widows and widowers, and it is the step that determines whether you receive the full back payment or receive nothing. If your survivor benefit was not just reduced, but eliminated completely by GPO, do not assume the correction happened automatically when the law passed. Some GPO cases require a completely new survivor benefit application. Here is why. When GPO originally wiped out your survivor benefit entirely, your claim was denied outright. Not reduced, denied. The system has no approved claim to reverse. It cannot correct what it never approved in the first place. You have to reapply. When you call SSA, ask this exact question. Does my case require a new survivor benefit application under the Social Security Fairness Act? That one question is the difference between collecting your full back payment and watching it expire in the system unclaimed. One more thing that affects people in this group specifically, and it has nothing to do with WEP or GPO. If your income was higher in a previous year due to a sale of property, a Roth IRA conversion, or any one-time financial event, Medicare may still be charging you extra based on that old income right now in 2026. It is called IRMAA, Income-Related Monthly Adjustment Amount, and it adds anywhere from $70 to nearly $500 on top of your standard Part B premium every single month, deducted automatically from your Social Security check. Most people see a smaller deposit and assume that is just how it is. There is an appeal. The form is SSA-44. It exists specifically for people whose income has dropped due to a life-changing event: retirement, loss of a spouse, reduction in work, sale of a property that was a one-time event. You file the form, show what your income actually looks like now, and the surcharge gets reduced or completely eliminated. If you are paying more than $185 a month for Medicare Part B right now, it is worth asking why. Download Form SSA-44 directly at sa.gov or pick it up at any Social Security office. The Social Security Administration has already calculated what you are owed. That number is sitting in their system right now. WEP reduced 3.2 million checks for 43 years. GPO eliminated 800,000 survivor benefits entirely. Both rules are permanently gone. The back payments are real. The average check is $6,710. Some people are owed over $22,000. SSA is not calling. SSA is not sending letters. The corrections that are not followed up on stay uncorrected. The money that is not claimed does not accrue interest. It does not carry forward. It sits. Log into your SSA account today. Check your benefit statement. Call if anything looks wrong. And if you are a widow or widower, ask specifically whether your case requires a new application. Share this video with one person you know who was born before 1963 and is collecting Social Security right now. That one share could put $6,710 or more into their account. Money the system has been holding since January 2024 without sending a single letter to tell them it exists. I will see you in the next one.